And now to the local markets. Earlier I spoke with Marcus Padley from Patersons Securities. Marcus Padley, early losses recovered by the close, but it was still a pretty mixed day.
Yeah, well, it's a bit of a nothing day, Tiki. One of the features of the recent rally has been the fact that volumes have been quite low. Today would be another day, and really not a lot of features.
Income stocks have done pretty well. Why would that be?
Yeah, in particular, the bank sector has been performing very well. I just want to make the point, in a market where people are perceiving a hard road out of recovery in the US and Europe, not a lot of growth, in other words, even though Australia's okay, not a lot of growth generally. There are a lot of people still cautious about seeing another global financial crisis after the rally we've seen from the bottom, and there's a lot of cash around, and people are really looking for the best return they can get on their money. Retail investors looking for a return on cash, the institutions looking for more defensive stocks with a decent return rather than a capital return. And so with the results season coming up as well and dividends coming up, income stocks really have gone to a premium, and things like the banks have been coming off fairly low, historically low PEs and high yields. This really is income stocks a moment in the sun, and certainly they seem to be performing.
And a little bit of takeover activity in the media sector.
Yes, Mitchell Communications, which of course is 30% owned by Harold Mitchell, have accepted and recommended an offer from the Aegis Group, a marketing communications company out of the UK, a $363 million offer at around $1.20 against Mitchell Communications' share price of $1.04. And Harold Mitchell's going to take shares in Aegis, of which he's escrowed, I think, for most of them for a couple of years, and you can take shares or a mixture of shares and cash or cash. Very successful. I mean, the last time the share price was up at that sort of level was in 2007. Harold Mitchell becoming a larger shareholder in an international group rather than a domestic one. All very interesting. Take the money.
And still in media, regional pay TV operator Ozstar posted half-year results. What upset investors the most?
Ozstar at the pointy end of consumer discretionary spending with a subscription TV product, which is of course a bit of a luxury, and their results were basically below expectations. It wasn't just things like subscriber growth, which was half what some brokers were expecting, but also financing costs. For instance, last year they were 9 million, this year they were 33 million, and total profit was 20 million. So you can see some rather peculiar things going on there. Sales do seem to have picked up, or growth does seem to have picked up in the last quarter, but basically just a shabby set of results, and it perhaps reflects on other consumer discretionary stocks coming into results.
Marcus Padley, thanks very much for talking to Late Line Business.
My pleasure, Tiki.